Hi everyone, yen crash. One word, yen from NGFX. Are you bearish down here? I know Greg is looking for 102. I'm going to try my line here. All right, long at 80, risking 60. So we'll see. It's very contrarian. I don't know if you looked at DSI, but there have been an awful lot of bulls in the yen. So the first sign that would tell me, is it a fib area too? Okay. Anyway, oh, your target is, okay. Uh-huh. All right, so we'll see what happens here. I don't want to completely give up on the higher yield scenario. This may have been, an election distortion. We could start heading up again. And I know, this weekend has really helped put some rocket fuel under the precious metals, right? So gold is going to clean out all the bears here. And maybe silver could go to 26 now. Thought it was going to try it up here. Christopher Inc. said we could go to 27 or so. And Dixie is more bearish. You could be bearish yen. I have this speed line down here. 78.6 is 91.44, which would actually be under this low. So we'll see down here. But look at this candle. And look at this candle. Yeah, it looks just as bad. All right. Anyway, I'm trying to catch a falling knife. Weak UG, yeah. Strong yen. A lot of people bullish yen. That's correct, Joe. Thank you. So S&Ps, the market looks like we're going to new highs. I'm not ready to fade this, but I'll tell you something. I believe the market is very happy with if Vice President Biden becomes a president and a Republican Senate, makes it hard for Joe to raise taxes. I think that's a lot of what this is about. And I think we have the Fed today. So we'll see. We'll see what the Fed has to say here later on. This is still working for me. We're on the verge of a 2-week reversal in EG. Okay, I think comes up around the 90-80 level. Not a bad looking week either. So like I said yesterday, I like this because I don't have to express direction of the dollar. I can just be right about the pound being weaker than euro, whether the dollar's going up or down. And here's the weekly on EG. Hasn't completely confirmed. It really, the off number is 90.96, so we're still 45 pips short of it, but pretty nice reversal week. Okay, I think they're going to squeeze people over this high. I think we're going up to this high. So this is one of my higher conviction trades. Okay, he's smart. That's when you do your selling, is when you have people to sell it to. So interesting. And we'll see what happens. Oil's still struggling. We keep having making higher highs in the indices. Yeah, I see it. Okay, so with the crude not being able to make new highs here, I mean, we are above the 61.8. Maybe it's going to stretch to 78.6. And, I'm just saying for the last few days with the S&Ps doing this, that oil is underperforming, risk on. So we'll see what happens. All right. And let's see what's going on. I really think today is a great day to join our community. Okay. Any new members? Hello, Tripal. Who joined this week? Or how about this? Who's going to join today? Because, you know, this action with the elections is not over. I'll give you the chat. The members chat, yes, for 10 days. And if you want to do a longer term deal, Joe will work something out with you. Okay, thanks for the report. You know, I think we just have a great team. You know, that's my major selling point. The technology on the site is second to none. But, you know, what's impressive is the team here, right? 18 decades of, we have 180 years of experience. And we all know Blake's a Top Gun and the Wizard. Still hoping he gets to sell Europound at 92. Steve's one of the most disciplined traders I've met or watched in my career, and I've seen quite a few. Oh yeah, the Jack's book is out. Paulie's a bulldog and a great technician. If you're missing his European crossover, you're shorting yourself. Joe's one of the best guys for representing us to the whole FinTwit community. And you know what? You should check out his charts on LinkedIn. This guy has skills. Okay. And we all know Amanda. She's an excellent trader, posts live trades in member chat. People love Amanda. You guys have all seen Andre's harmonic work. It's elite, very good harmonic work. And now we have Leandro for you Spanish speakers. Leandro is conducting a Spanish speaking webinar for us and Pepperstone. So, you know, if English is your second language, I've known Leandro from Twitter for I don't know how many years. Used to interview him. The guy knows how to trade. So, I mean, where are you going to find all of this talent in one site? 4 different trading methodologies in one site. Yeah, he shares some charts on LinkedIn. Yeah, Joe's fairly active on LinkedIn. So who else have I convinced to join after looking at our team? Anyone? So you get Elliott Wave Harmonics, which usually you would need 2 subscriptions for. Just for that. Candlestick, Basic Tech, Macro. Okay, Giuseppe's saying best bunch of traders around. So you know, if you trade 1 lot full size Euro contracts, show us my P&L. We're not money managers. Why would we do that? Oh yeah, I'm supposed to ignore you. Show us yours. Okay, so my accountant sees mine, and my wife doesn't even see mine. So why should I show it to you? Oh well, that's wrong too. How many times have you seen me be right about things and you've been wrong? Anyway, I know. I know I'm not supposed to say something, but if it was up to me, FX trader, I would banish you to the Isle of Elba. Because of I would banish you from our community. You're toxic. I think you need some psychiatric help because you seem to live to want to discredit people and root for others to fail. And everyone that I've seen do that before only does it to rationalize their own inadequacies. Otherwise, they be focused on what they do. Okay? You know,
I
I've
mean, it's like
moderated.
is it like the guy that drives a big truck?
Yeah. Yeah, it's kind of like, it's exactly like
I'm
that.
just kidding. If you guys got a big truck, that doesn't necessarily mean you have a small pinky
Yeah,
finger.
I know what you mean. It's a phallic symbol. Anyway,
Irrespective
I
of all
think big
that,
trucks are awesome, by the way.
irrespective
okay.
of all that, we don't censor people.
Well, I think that's ridiculous.
I don't.
Well, I do, because you know what? If someone had COVID, which is what this guy has when he comes into our community on a different level, just to ignore him and allow him to be here, I don't get the point.
Anyway, let's
all for
move
free
on.
speech. I've said it before.
Yeah, but this isn't free speech.
It's okay.
Like,
let's
free
move
speech
on.
is respect and talk about an opinion. It's not free speech. Let's let this guy try and find somewhere else to spread his toxic behavior. That's my view. Yeah. Okay. Go ahead,
Look,
Blake.
he even makes fun of me, and you know, I used to make trades where it was less than $1 billion in notional. It was noise for me, and he still makes fun of me. So that tells you a lot of things about him. Anyway, let's move on.
Anyway, all right, okay. Look, I apologize, community, but you know, I'm an emotional Jewish guy. All right, and I try and contain myself, but I really believe do unto others as you would have them do unto you, even in this very difficult and shark-infested waters of trading. And I rest my case.
Yes. All right. So,
well,
Blake,
you know, I was just, you know, it's you are an emotional wreck. Me, I was just talking to my neighbor yesterday because he's my son's chiropractor, and he went out hunting, and both him and I are prior military. He's a ex-State Department guy. Yeah, he's one of those guys that carried like a submachine gun underneath his underneath his
trench coat.
You know, he's one of those guys. Yeah, and he's like, man, it's much different than hunting humans. I'm like, damn straight.
Yeah.
All right, let's go. It's time to go. I'm
all right, go ahead. I'm sorry, I lost control today.
I'm trying to grab the damn screen so we can talk because there's a lot of crap moving right now.
There is.
Let's go over here. Okay, where am I at? Okay, so here's the euro. Euro's about ready to press in the 88% retracement, but this is the trend line resistance. So you got to be really, really careful with some of these markets right here. I'm about ready to get triggered into some trades actually. So let me talk about where we're at, and then we're going to get into the charts because this is all really important. What we're doing ahead of the election results. You can see this is Decision Desk HQ, which is Fox News's election site. And this shows, you know, what the different states are, you know, how close we are, and you know, that type of thing. And what we're really close to doing is finishing up the rest of these states. You can see there's Georgia, North Carolina, Pennsylvania, Arizona, Nevada. All right, and it shows that Biden's really close to taking Nevada and Arizona, and the race is really close in Pennsylvania, Georgia, and North Carolina. Actually, they were close in all of them. But the fact is if Biden just takes, you know, Arizona and Nevada, it's over. And these three are really close to. So, you know, the election's pretty close to being called. Whether or not Trump will give up without a fight is to be seen. And I'm not in that camp that he will. So just so you guys all know that. I mean, I think you all are very aware. I don't think he's going to go down, you know, he's going to go down silently. He's going to go down swinging. So stocks are higher though. Stocks are higher because they're pricing in a Biden win. This also brings out another risk. Do you know what the other risk is? The other risk is that as the markets price this in a Biden win, you also have the risk of a buy the rumor, sell the fact, right? So this is a situation that we're getting into where you could have the risks of the election results being dragged through court, but let's actually stop and talk about that for a second. It has to be a really razor thin margin in order for that to happen, because the Republican base will probably, not allow him to really embarrass himself. I mean, because if you recount ballots, he's forcing all these states to recount their ballots, and most of them have receipts. And I mean, I'll give you an example. Like when I cast my ballot, I got an email, and an email and a text that my vote was counted. We are archaic in some cases, but not completely. So I mean, it's recount to recount. If you're off by maybe 500 votes, then yeah, you got a recount makes sense. But when you're off by tens of thousands of votes, it doesn't really make sense. All right, so then illegal votes or illegal whatever, casting of ballots, we might go into courts. Have the markets priced that in? No, they haven't. So I think the risk is when you get, the S&P that's right here. Damn, I knew that was going to happen. Gosh, dang it. Do you guys know where my order is to sell the Aussie? Guess where my order is to sell the Aussie?
One pip above the high.
It is 72,579.
No, 72.55 and 0.4 of a pip. Gosh dang it. I wasn't even paying. I was sitting here yammering with you guys when this started. I literally missed my sell order by, gosh dang it. And if you're a ForexAnalytix subscriber, let's just go ahead and so you guys can see this. The analysis from 26 minutes ago. Aussie yen is at resistance and downtrend line. It's a 618 retracement once again as well. And I told everybody in the chat room, I'm like, I'm going to short some Aussie dollars or Aussie dollars up at resistance. I at least shorted the Aussie yen. Gosh dang.
I know that is really aggravating. Were you sleeping when that happened?
Yeah. Well, I'm not going to blame you guys, but I'm going to. So
you were sleeping when that happened.
I'm actually going to blame the emotional Jewish man that's on this webinar. I could have actually.
Yes, I'm with you. Let's all blame Dale.
Instead, I had to jump in and miss that trade.
I'll transfer some cash to you.
I'm just kidding, Dale.
All right,
just joking. Not. Anyway, the thing about the Aussie dollar, it's up against resistance. Look, there's a lot of pairs that are actually up against resistance. It's not just the Aussie. You got the euro dollar that's probing this downtrend line, 88% retracement. Screw the cable for a second. The dollar Canadian just pushed below the support. We're coming really close. You can see I have like alarms here because I've got orders down here. 127% extension of this actually this is the spike into the election. Okay, then you have another 127% extension around horizontal support. All this 130 level is huge. Dollar Mexican peso broke down, but we're approaching the 2019 breakout point. I mean, the dollar yen is absolutely breaking down, and I've been trying to chase this damn thing short all day long, and I'm frustrated because I haven't got caught into the FOMO, but I did short the Aussie yen, so I feel all right about that. Because if you didn't see the Aussie yen, it hit the downtrend line resistance in the 618 retracement. Again, if you are a ForexAnalytix subscriber, oh no, this was 28 minutes ago. I got to go back to the Aussie dollar is what I was trying to show you. That was the Aussie. This is the Aussie yen right at the right at that resistance. So you guys would have known that. Aussie dollar, 35 minutes ago, the Aussie dollar reaching for the 72.50, 60 confluence of the 618 retracement, 161% extension, which should stall the pair there. And that is why I was trying to sell the Aussie dollar 50 pips or 20 pips higher, and then the bottom just fell out of it. But anyway, again, if you guys are ForexAnalytix subscribers, you guys already knew about all that stuff. Okay. That's why you should, spend $1 and be part of the community. All right. So let's get into the charts here. Let's start with, and let me just really quick before I get into the charts. I already said that if Biden wins, and especially if there's a concession from Trump, which I don't expect necessarily, but just in case there is, I am worried that the stock market might have a buy the rumor, sell the news type of event. If you look at the S&Ps here, we're up against, the 88% retracement and triangle resistance. If you guys think a breakout is happening right now, it could. But the risk to the stock market at this point is if we are building this triangle, we haven't built out the consolidation long enough. So could we break out here? We could. But if we did, I would immediately be looking for a harmonic pattern. Immediately. But and that's definitely a possibility. When I'm looking at consolidations like this, I would love to see 3 points of articulation on both sides, which we've only got 2 over here. We're at the third right now here. So, and that isn't even count if you break out. So I'd rather see some more consolidation here before I'm calling a breakout. And anybody that trades a triangle type of formation or wedge type of formation, you need those 3 points, for a breakout, or it's just not sustainable. So I'm looking at this as being more of a harmonic if we do break. So it'd be more of a, and it could. I look for a move like that. I'm just giving you an example here. And then that would be a butterfly pattern. And then I'd look for a reversal. That's all that is. Okay. Which could happen. Like I said, it's entirely possible today. We make a run for, over the next couple of days, we make a run for 3,700. And then I'm going to short the hell out of the market up there. But that's just me. All right. So let's get into what we're dealing with today. All right. So resistance. Yesterday, just so you guys, just for the record, and you guys were listening to the Face webinar yesterday. By the way, Greg is coming in 15 minutes, so I'm going to hurry up. And you guys are in luck because you guys have Greg Horvat talking Elliott waves coming up in just a minute. So congratulations to you guys. All right, now yesterday, if you remember the bias chart yesterday, what did we write down as resistance for the S&P? Do you guys remember? Wait, hold on. Let me go ahead and take you over to the chat room. Here's the chat room. Here's the files list. Stelios posted it yesterday. So let's go back to all of these charts from yesterday all the way to, oh my God, here we are. Nope, that's Poly, November 4th. So Stelios has posted. He's really good about it. Maybe he didn't. Oh yeah, no?
Maybe you should pay me a bonus for doing that. Come on.
Dude, come on, man.
Unless we don't find it, in which case you get a penalty.
Yeah, you get a penalty. Then you gotta put money into the jar because you didn't post it yesterday.
It's a double-edged sword.
You didn't post it yesterday, you scumbag.
I took a screenshot.
Okay, so anyway, I'm gonna get rid of that.
I've got it here. What do you need? I've got it here.
No. What was the
resistance? Too little, too late,
Stelio. What's the first level
penalty
resistance for the S&P?
S&P 34.85, 35.25. You had
34.85. Look where we stopped yesterday. Daily chart 34.85. Now we pulled back for a few hours, and then here we are at 35.16, resistance at 35. I mean, you can say it's 16 and 25. I'm just going to write down 20. Okay. So anyway, that is resistance today. We can, you know what? I'll just put it in 35.25. So thank you, Stelios and Steve. Appreciate that. Okay,
Thank
support. You. Let's take it. You know what? Since we're on a possible reversal, like risk reversal area here, I'm going to look at that level as being support, because if we break back through 34.40, we're probably still in the triangle, right? So that's going to be important. Like if you're long right now, you're probably thinking, I don't want it much below that, right? I mean, if you're a buyer, so we are still in a range, believe it or not. Now some things are breaking, which we have to be. It's tentatively because it's fresh, right? Oh, look at that 88% retracement holding 118.52. All right, and it held like a champ. That we're already 20 pips off of the highs. It's important. Horizontal resistance, also important through here. Trend line, also important, okay? Support for the euro dollar is going to be all the way back down here at 117.50. So I'm going to write that down. Resistance, 118.50. Okay, I think that's the high. 59, I'm going to actually write 60. 118.60. Beyond that, I'll just say 119, because you can see this right here, 119. We spiked above it, but really it's 119 that's holding. So 119, just in case. All right, cable. Let's go ahead and I don't know what to do with the pound. So I honestly don't know what to do with it until we get past Brexit. I really don't know. I mean, you guys can have fun with this. 129, 131.50. That's it. Have fun. That's it. Aussie. 72.50 is resistance. That's that we already talked about it, why it's resistance. So let's just go ahead and write that down, whatever the high is, 72.55. We don't need to regurgitate all that. Support right now is 71.55, because if this level breaks again, then that means the bulls are going to be caught wrong-footed. So that comes in at 71. Let's just write 71.60. I'm trying to get this done. Oh, do we have data coming out? We have, by the way, we do have Powell today, just so you guys know, just in case anybody forgot about
I think that's all the data the market cares about.
You have jobless claims, but really just
yeah, I mean, I don't think anybody cares about jobless claims.
The market is just waiting for Powell to say, yeah, don't worry, you know, no matter what happens with the elections, you know, we have your back.
Right.
And that's it.
Yeah, okay. I agree. Okay, so dang it, I didn't want to do that. So as you can see here, and let me delete this. Let me go ahead and delete. Dang it. Keep putting the wrong thing down. Let's delete this. I think we can, for now, dismiss the risk of a head and shoulder pattern. I mean, because we already took out the right shoulder. So which I figured was going to be the case. I wasn't really the data should be out.
Jobless claims a little bit worse than expected, but very close to expectation.
Ignore it.
Yeah, thanks guys. Okay, appreciate it. Okay, so here we are. Last level of resistance, but really is because it's the 88% retracement that's holding again. It's the 68.05. That's the resistance that we should be really paying attention to, right? So it's just 68 cents. or at 68 cents. So let's just write that down. That's pretty key this morning. I'm not saying that we're going to get above it. I'm just saying that we should be, you know, watching it very carefully. And you notice how I haven't put Aussie as bullish because it's not. I haven't put Kiwi as bullish because it isn't. But I'm definitely not bearish right now because we'd have to get below here for me to turn bearish. So right now, I don't want to write that down. I don't want to write down 72.20. I'm sorry. I've got to write 66 cents, and it's not. You know, I wish I was really confident about some support level that's immediately below the Kiwi, but I'm not. I would say that, you know, if we did break back below 67.20, then, you know, if you're long, you're probably wrong. I mean, if you're long, it's probably going back down this direction. So I don't think I'd want to be long if it got back. Sorry. If it got back below there. Okay. Dollar Canadian. So here we go. We're breaking down. It sucks because I was actually short the dollar Canadian, I want to say like 3 different times yesterday. I actually, and if you don't think I wasn't long, I was long too. I actually played this both sides right here. Actually, I want to say the last, you know, 2 days, not today, but the previous 2 days, I've been long and short right down here at this 131. But a couple of trades at the end of the day, I was actually shorting the dollar Canadian around the 131.30, thinking, okay, we're going to break down. But, you know, it was the end of the day, didn't do it, or we didn't break, and I just closed it, you know, for like flats. And then, you know, we bounced up in Asia, and then we finally break down today. So what's happening today is what I was hoping was going to happen yesterday. Obviously, it didn't. So now it is. So for now, while we are below, and I'm gonna give you very tentatively, while we're below 131, you stay bearish. But if we get back above 131, then you got to flip back over to range. So then you get a false breakdown. So it's bearish for today, for now. $130.15. This is the previous lows from way back here, but I'm not down with that. I'm going to say 130 and 130.37. Okay. All right. So again, I'm bearish right now, only right now. We get back above 131, and then it's all changing. It's all changing. Okay. Dollar max, same scenario. We finally broke that 2084. Had orders to sell dollar Mexican peso overnight on a little bit more of a rally to this previous 618. Didn't happen. So let's get rid of that. We don't need. Oh no, we do need that. We don't need this. Okay. So we already hit an 127% extension. Looking for a move down to 2040. Now, this is also, if you guys don't recall, the 2019 breakout point here, which comes in at 2025. So I think the risk is that we get down to 2042 on that break. So this is the same deal as the Canadian. While we're below, whoops, here's the dollar max. While we're below 2084, it is bearish. Looking for 20, 25, 20, 40 as well. Okay. All right. Dollar Swiss. Here we are pressing towards important support. Look, we're at 90.50 again. Wasn't that support from yesterday? It was. Next support below that is 90. And that's key. So key support coming up. Resistance will be back at the 91 cent level. Okay. Dollar yen. Okay, so dollar yen, same deal as the US dollar Canadian and the US dollar Mexican peso. Same deal. Okay. We're bearish while we're below 104. We get back above, I would say right here, should be 104.15. Let me remove that. So pissed that I missed that trade. 104.15. Then I think what happens is we, bounce and then we get a false breakdown. So, and which can happen. I mean, every time we probe down here, it gets gobbled back up again. And we all sit here with our thumbs in our butts going, wow, I can't believe that just happened. Right? It's the risk right now. So I do think it's going lower because we broke out this triangle. Right? So let's delete that. And if you do a little bit of work here, let's do this. Low, high, next support, 103.40. That looks like the next stop. Okay. Dollar index. Trying to wrap up for Grega. Okay, so here's the dollar index. Probing support. How important today is this support level, right? Ooh, that's pretty important. 92.50. We've written that number down before. Right? Should we make the assumption we break? Why not? Next support after that, which would be 91, 98, so basically 92. Okay. Oh, what a rejection by the euro. Gosh dang it. And I'm just not getting filled on any of my orders. And that's so irritating to me right now. Okay. Who's a Seinfeld watcher?
Dale is, I think, was.
What?
Yeah.
What did Costanza? Serenity now. If I could.
Just yeah.
Serenity now. Serenity now.
I tried that this morning. Didn't work, as you.
No. Apparently, you blew a gasket. That's what happens, Dale. Sometimes. All right, so a move back above 92. Well, let's mark down. This is going to be Serenity now.
He also had a strategy for doing the opposite of everything he had done prior in his life, and it worked out. He even got a girl.
I feel that about my trading sometimes. Like if I did the exact polar opposite, I would, he
had all kinds of problems. Like shrinkage, as Chad Cummings says. Yeah. Festivus instead of Christmas.
George Costanza is like the fun.
I love that show. I love it. Larry David.
Oh, the good old days. I love Lucy too. For real. And I Dream of Jeannie. I really did dream of Jeannie.
Yeah, I had a crush on her.
I was only too, like 6, but what the hell? I
ahead of your time, man.
Jeannie, are we talking about the 60s series?
Yeah.
Oh, okay. I think that lady actually died rather recently, like last year.
Oh, thanks. for the
Thanks for
update.
bringing me down. I'm gonna go stick myself in my eye with my a steak knife now. Thanks, Steve.
Yeah.
My pleasure.
Thanks. You're the best. All right, so we got some support. God dang, I'm really finished with you people today. All right, and when I say you people, I'm talking about the people at ForexAnalytix right now. 913 is a 50% retracement. That is the support, and it's horizontal, and it's spike high, spike low, spike. It's all this. You can see it's holding right now. So that comes in at 913. You guys are killing me this morning. All of you. Serenity now. All right. Resistance would be right back at 930. Would be right here. Let me just take this here. Thank God you don't have to deal with me anymore, Dale. You can have Grega.
Steve likes it.
I know.
Handle Grega.
So it's roughly 930. It's roughly 930 somewhere. No, it's
Always
not in New York. That's going to be resistance. Last but not least, gold. Last
ding, 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 gold breaking out.
Yeah.
Good call, Steve.
Yeah, but I didn't see your pattern in place, Steve. Boom for silver this morning, 2 hours ago.
Nice, Blake.
Nice one.
But gold was one of the. I could have gone with either or, and Chi in our
silver was better.
About gold, and I'm like, yeah, gold looks bullish, but silver's, it broke that trend line, the 618 retracement.
It's outperforming percentage-wise too. So
yeah, that's
what's selection.
Usually the case when metals do good. Usually silver does better.
Yeah, yeah, right. And that also helps it be sustainable, right? So I'm gonna write down 1933 spot. Do I want to put range yet? Not really. Not yet. Support right now is 1910. That was that was a big number for us last week too. Okay, so there you go. Bias chart's done. So Stelios, if you want to go ahead and take a screenshot, you can, or anybody else who wants to. So you guys have this information every day.
I did it.
I want to thank my mom. I want to thank God.
My producer.
Alexander said my sound is very low. Is my sound low?
No, it's okay, mate.
Okay.
It's in.
Man, sometimes I step a little further away from my microphone. Well, it's like it's right in front of my face. So sorry if it's a little low. Anyway, I know Greg is going to come here, so I'm going to let you guys take over. Everybody, thank you so much for the continued support. For those of you that are ForexAnalytix subscribers, thank you so much for your support. By the way, if you want to try to get ForexAnalytix for free for a period of time, go to our Forex sponsored page, and you can open a Pepperstone trading account if you're not in the United States or Canada, and you can get ForexAnalytix for free for a period of time based on how much trading you do. So check it out, and why not? This way you don't have to. It can save you a lot of money. Anyway. I'm out.
Take it easy, Blake.
See you guys. Have a great one.
Right.
Thank you, mate. Enjoy.
Buddy.
Well, first of all, I want to say thank you to all the people who wrote to us on the chat here in the beginning of the webinar when we were discussing. All your comments are very, very useful, and it's great to hear all these positive things. Makes us keep going, basically. So I don't see Grega. He said he didn't have his link to join. I gave him mine. Let's see if we see him in the next few minutes. But he should be joining. So what have we got? More risk on, everything going. Actually, oil. It's interesting. Oil is not following the whole risk on. Grega says he can't log in. Okay. Yeah, so oil is not following, which is interesting, but general risk on sentiment, that Biden's going to win, and although the Trump campaign, literally minutes ago, they made an announcement that they are going to make an announcement in Las Vegas later today. I don't know what that's going to be, but they are trying every trick in the book, and they want to recount where it's close, and they want to stop counting where they're ahead. I don't know. I mean, I don't know what's happening, but it's not. The problem is it's not clear yet. It might become clear, but how long is it going to take? If they go to the what is it, via the Supreme Court or whatever issue or whatever.
I don't really think he has any chance, mate.
Well, I don't either, but you never know. And it would be bad if this thing drags out for a month. That's for sure.
Markets don't seem to really care for some reason or the other.
There you go. Fox News reporting the Trump campaign to announce a lawsuit in Nevada election.
Yeah, okay. Yeah, good luck.
Yeah. So, Rick is saying it's about ballots that are not legal, not actual count. I'm not sure. I don't know either, so I'm not going to speculate. But I think the bottom line is he's going to fight it, and he is fighting it. So, uncertainty might be still with us for a little while. Clearly, the markets don't care. So, buy this generational low at 3,500 in the S&P. I don't know what to say. I'm not long and I'm not short.
Once in a lifetime opportunity. There you go.
Yeah, I'm not long and I'm not short. A friend of mine asked me a few minutes ago on Twitter, silver is not going to your buy zone, which was in the 21s. What do you do? I said, look, I'm still waiting for 21 something. If not, if we break out convincingly above 26.5, I'm going to get along the breakout there. So, we'll see. We'll see how it goes.
Hello, guys.
Hey,
Gregor.
Gregor.
Finally.
Finally. How are you doing, man?
How are you doing?
I'm fine. I'm going better.
Good.
So
you decided to test, if things are as they say, right?
Yes, exactly. So, I mean, we will see how I will be doing and my wife in the next few days. So
you'll be fine, mate. You'll be fine.
Okay, let's starting.
Okay, so maybe you can take the screen if you want.
Grab the
screen.
You got
it. Yeah.
Anyway, Gregor, the course of the disease is an ending diagonal for your family. All right, buddy.
Sharp recovery from here.
Yeah, that's right. Ending diagonal.
Okay.
Oh, I see. USD Turkish lira, right?
Yeah. I mean, should we really look at this one?
It's the train that never stops.
Yeah, exactly. And I'm not sure what really should happen for this to stop. ZAR notes are very cheap, at least.
Erdogan being replaced one way or another is the only thing that can actually stop the Turkish lira depreciation, if you ask me.
Yeah. So let's better go to some other markets, right?
Mm-hmm.
Okay, so we've been talking about this dollar pullback last time. So if we first go to this dollar index, from a simple perspective, we are still holding here very nicely below this March 10 lows. We retested it twice here, but looks like that we are now finally going to see more weakness. Of course, if this is going to be a triangle, then just be aware that another bounce maybe towards the end of this week could be coming here, maybe even back towards 93.20 or so, and then I would be looking for another sell-off. So either if we go down from here or after a pullback, I mean, it's the same situation. I see ongoing correction that suggests that we are headed below these September levels, and I've been looking for this pattern for the last 2 months or so. So in my opinion, nothing has changed really. This trend for March is still much intact, and I think that this goes perfectly with stock market. The stock market is still, in my opinion, headed higher. So if we look very quickly at the S&P 500 here, we actually are recovering from this support 32.32, and looks like that this could be finished an ABC flat correction, or maybe still a triangle if we see a pullback. So actually it's the same scenario but opposite compared to the dollar index, and I'm looking higher, expecting more upside. From a trading perspective, keep an eye on pullbacks here. for this wave 2 or wave E. So based on two different interpretations, I'm looking for one same direction. After a pullback, meaning more upside. So if we see a pullback, ideally we will get it from this current trendline resistance if you connect from all-time highs and these October highs. In such case, I would be looking for a pivot point of this whole correction, which is around 33.90. From there, I would be looking for a bounce. Of course, if this is going to be a triangle, you know that there can be a pullback all the way back to the lower side of what this triangle range. But generally speaking, I think that this is just a pose with these nice swings that are just trying to confuse traders, but investors, I think, will stay on this bullish track that is still...
What's the triangle's target, Greg? First of all, I do agree that this is a triangle and the interpretation is bullish in the short to medium term. There's no question in my mind about it. I mean, from a technical perspective, it's by far the likeliest scenario.
A lot of talk about 3,800.
Yeah.
Where would you be aiming?
Now, I'm always using triangle measurement. Now, this is the technique where you take the widest slack here, which in our case was wave A, and then you project
and extend from the breakout point.
Yes, first one is from a breakout point, and the second one is after this completed wave E. So actually you will get
from the beginning then of the breakout leg.
Yes, exactly. So in our case, that could be around 3350 or so, or maybe 3400. So I think that there is room for
37 to 3800.
Yes. Dale, what you said, Dale, earlier?
3800, you said.
Yeah, I've seen some 3800
this
targets.
is a very reasonable target, but maybe it will not be straight move to the upside. I think that there can be a pullbacks, and of course, this would be very nice opportunities actually on the long side, considering where the dollar is and where the dollar can be headed. Now, looking at the euro.
Euro seems to be over, more or less, right? Well.
Exactly. It's not the same pattern like I'm tracking on the dollar index. It's a little bit different, but same interpretation, just a correction on the way up. We are currently at the upper trend line of this complex corrective drop. So I think that this breakout could be confirmed this week. Let's see where we will close tomorrow, and then maybe a pullbacks could be opportunity on the long side to catch a wave 5. Also, Aussie, I think it's turning up very nicely as well.
I think so as well. Very, very beautiful corrective formation.
Yes, we found a very nice support down here. We are breaking this bullish flag, and it looks like that there is more upside ahead. But not only Aussie dollar, even New Zealand dollar could be interesting. But because of divergence between those banks and the policy, as you know, New Zealand could go to maybe even to negative rates, while the RBA said no. So in my opinion, this could be a very nice bullish scenario for Aussie against the New Zealand dollar. So looking at this structure here,
also a corrective pattern. I mean, it was clearly that it was unfolding in a corrective manner.
Yeah, exactly. Very nice free wave drop. You can see that price has actually found the support at this lower. Let me just fix this chart a little bit. At this lower trendline support, and now I also attach this S&P 500 in blue, and you can actually see that there is a positive correlation, but this market is much higher. Okay, the S&P 500. So it looks like that this Aussie New Zealand dollar pair will continue higher in a risk
might close the gap.
Yes, and of course it could catch it up. Yes. So in my opinion, based on the S&P 500, the Aussie overall could be much better buy against the US dollar or some other cross pair rather than New Zealand dollar. But even New Zealand dollar could do well as well, especially against the US dollar.
Greg, speaking of all that, what do you think? I mean, I would be skeptical due to its not so recent anymore past, but it seems that both bonds and, of course, USD yen are actually also on the move. What do you think about this move?
Just a second.
USD yen, especially breaking through 104 and triggering several technical formations, seems to be, a legit signal.
Actually, this appears to be a very nice recovery here. We are here turning up after this wedge pattern in wave C of wave 4. So I'm looking for more upside here, meaning that
new all-time high,
or at least 3-wave recovery. I mean, we have only one leg to the upside. So in the meantime, Japanese yen could do much better. And now below I have here dollar yen, but it's inverted scale. Just
yeah, so it matches, yes.
Compare it, yes.
Yeah.
But clearly, I mean, it's a very nice pattern suggesting that Japanese yen is headed even higher against the US dollar. So if we look at
so in essence, USD yen headed lower. Speaking of which, I was saying yesterday that there is also like a pocket of air until 101.18 in USD yen. I mean, I see no real support until we get down to 101 and change. What do you think about that? What do you think about downside targets?
It's, as you said, it's a very, I mean, I don't see either any important supports here. Maybe the 78.6, but I believe that we are quite close right now.
Yeah, 103.40 is the 78.6.
Yeah, so we are quite close here. So I would be looking for this triangle measurement with the first target here at 102. Since we are breaking out of the triangle quite aggressively here. So and was looking for this wave E. It perfectly stopped at 61.8% yesterday, and now we are turning. So it looks like this move is in full swing. And if we consider that where the dollar has room for more weakness on dollar index, I mean, then obviously dollar yen could easily stay bearish here, considering that we are in this current correction.
Legit breakout also in the case of gold.
Yeah, I was looking at it earlier. I mean, it makes sense for gold to continue higher. So I just came out with this and updated this wave count here. I mean,
why don't you just draw the bigger trend line, you know, from the highs?
Yeah, we are breaking it. I mean, you mean that one?
Yeah.
So that could be a C up there around 2000, huh? Could just be a C wave up there, and then
actually no, Dale. I mean, why I put this wave count together is that we are still, for now, could be making only 3 waves up here from the lows. So the whole structure could maybe even transform into a triangle if we just stay sideways. But if this
might be the case, but on the other hand, Gregor, I mean, looking at the Euro USD in the precipice of breaking higher, looking at the DXY breaking lower, looking at the bonds turning.
Yeah, all suggest that gold will continue.
Yes. I mean, you know, combining with that, I think it's. I'm not saying it's a slam dunk, and you know, nothing is 100% sure in the markets, but it looks increasingly likely.
Yeah,
that we've already started another move higher. You know what I mean?
So the tricky situation here is for maybe for short-term traders, because we haven't seen a very strong bounce from the lows that would say this is a tradable low and we are going much higher. It's a very tricky structure.
Which makes it even more interesting, because there is a very good chance that the train has left the station and not a lot of passengers are on.
Yeah, but I would be careful as long as we are trading here still in this potential third leg up. And maybe if we stop at 1945, I would be very careful. But if we are going to see an extension higher towards 161.8, then this would be our confirmation that we are in a wave 3 and not wave C. And in such case, I think pullbacks could be interesting. So for me, I would not be buying it here, because I know that it could stay sideways. But if we are going to see an extension higher, meaning a sharp price move with the 5 subwaves, then I would be willing to look for pullbacks.
Can I get one in before I bring in our guest, Gregor? Is it a layup that bonds are going to new highs? I mean, we had that huge move after the election, but is that just a low reaction? And yields, are you looking for 10-year yields to go to new lows after what happened? yesterday?
Yeah, just a second. As you see here, I'm looking here for a triangle, barrier triangle. We also came down very nicely here if you will draw the trend line. So in my opinion, I think that there could be more weakness here ahead because simply it's a very strong move, in my opinion. It looks impulsive on the short-term chart. So maybe we are, even if we just stay consolidating here in this range, we are reversing from the upper side of the range, and some basic technical analysis could be headed to the lower side of the range.
Okay, thank you.
Do we have a guest, or we can give more time?
Well, Peter Goldstein is with us.
Okay, nice. We have Peter with us. Okay, so Gregor, let's do it again this week, if of course you have time. I don't know, Friday.
Yeah, sure. That's tomorrow.
I hope you and your family feel better, my friend.
Thank you. Thank you very much.
Godspeed. And
get better fast, and you anyhow sound okay. I mean,
yeah, I'm okay.
Yeah,
I'm always okay. I must be.
He's the opposite of me. Let's see. Hi, Peter. Hello, Mr. 61.8. Where's Peter's? Where is
Can you hear me?
Got
yes, yes, we can.
Excellent.
Hello, Mr. Super Cycle. Welcome back.
Thanks, Dale, for having me back. How's everybody?
Okay.
I enjoyed watching the previous presentation. There's a lot that I agree with, actually. You want me to get going?
Yeah.
Okay.
You're on, buddy.
Sounds good. Actually, I am starting with gold. And I do agree that there was a triangle, an ABC, with a barrier triangle in the B wave position. We've had a few gaps up since last Friday or Thursday. It was October 29th, I think, is when yellow wave 2 bottomed. And today, this morning in the pre-market, we're up against resistance. I don't know if I'd call it that, but it's basically the recent high, late October, around 181.30 or something like that on the GLD.
Right.
I do believe it is a third wave. And normally, even if it weren't, I think even if it was an ABC, a counter trend rally, which I don't believe it is, you should get back near the highs of the B wave. So the key is, if we break above 181.30 or so on the GLD, we're likely to gain several percentage points. So we went long twice this week, most recently yesterday afternoon, and we're probably gonna cash out this morning and then see what transpires after that.
Okay.
But there's plenty of reasons to be bullish. In fact, to be honest with you, I had a moment of weakness last weekend because I was starting to think that maybe, just maybe, this is a top, that the market topped. But then the price action has its way of changing your mind quickly, and I reverted back to my original bullish thesis. We talked in the past about, I think back in late February, when the initial decline took place in the market, the first leg of the bear market.
You're still showing the gold GLD. I'm just letting you know.
Right. And I said back then that no president ever got reelected during a recessionary period since McKinley in 1900s. And we're seeing, the trend happen again, or, the election is following on the lessons of history that, Americans vote their pocketbook. If they're feeling pain, they're going to demand change. They're going to ask for change. So You know, the election isn't over yet. That's, you know, most people think it's pretty much over. We'll see what happens. But the market didn't care who got elected. The only thing it wanted is to avert a blue wave scenario and keep everybody in check. Anyways, the September high in the Nasdaq, reached the
yellow 3.
the edge of my, can you hear me?
Yeah, yellow 3.
Yellow 3 was the early 2020 high. It's when,
oh, okay.
I'm sorry, no, yes, it was. Yes.
Yeah, okay.
And then we had the shock, the virus shock that led us to yellow wave 4.
Right.
And since then, we've been in yellow wave 5. I almost believe that, you know what, it might be over. You know, last weekend I was looking at a million charts. I said, there is a possibility. And then things took off. And the beauty of the September high is that it sort of confirms my overall thesis that, you know what, we were near the highs, we're back near the highs right now. And but it's not quite over yet. Yellow wave 5 and orange wave 3 will end north of 13,000. And then that will bring the whole thing, the cycle. The yellow is the cycle wave that started 18 years ago. It will bring it all to an end. And then I don't know what the catalyst is going to be. I was starting to think that, you know what, maybe a double dip recession, because the market right now is pricing in a lot of optimism
about a vaccine.
And that's an understatement. I mean,
yeah.
I used to laugh at people in the, 3, 4, 5 years ago, and they were saying it's all Fed induced, because it wasn't totally true. Sure, the Fed greased the wheels of the economy, but earnings were, on the up and up. Yeah. And now the market is truly addicted to opium. I'm sure you agree with me, because all they talk about is, the stimulus package, and the Fed is behind us with trillions of dollars. And, meanwhile, all these companies that so far have posted their earnings, they weren't able to provide any guidance. Yet the S&P as of today is trading 200 points above a fully priced 2021, as I'll show you later. But anyways, let's look at the short term for a second. This is the first leg down in September. Then we had a nice bounce into mid-October. And then I do agree that there's some sort of triangle taking place. I don't know if I'd call it a flat, that ABC, because the C wave should theoretically drop below wave A unless you have a running flat. But we don't have a running flat either, because the B wave did not exceed the start of wave A. So as of the overnight action, the overnight action actually reached the top, the upper trend line of the prospective triangle. We reached it. And I have reason to believe, at least from the S&P 500 perspective, that the D wave is unfolding as a double zigzag. We'll find out, we'll see if that works out or not. But if the S&P, if the ES, the futures contract, exceeds 35.10, I'll start having my doubts. Okay.
If it exceeds what?
35.10. 35.10 on the S&P. This is the Nasdaq, but the S&P is pretty much the same. It did reach the top, the upper trend line, same exact formation. The Dow, on the other hand, if you noticed last week, the low in the Dow actually dropped below wave A. Its C wave reached the 200-day moving average. So it might have been a double zigzag or some sort of sideways pattern. It might have been a double zigzag. So if we rise above the B wave on both indices, then you have reason to believe that the triangle isn't playing out. And there are other indicators that I'm going to show you that casts doubt on the triangle formation. It casts a little bit of doubt on it. I'll show you why. The other thing, if
if this is a four, Peter,
yeah.
and I'm dangerous when it comes to Elliott, but I have learned that when you have a four as a triangle, that the thrust out of the top is the terminal thrust, and it's over.
I'm glad that you said that, because if you remember during my previous interviews, I highlighted the triangle in 2019 that began in early May and didn't end until early October. It was a sideways triangle in the Nasdaq and in the Nasdaq futures and in the ES futures and the S&P futures. It was a multi-month triangle that led me to believe that the next move up would be the last. Now, let me tell you a little bit about thrust. The thrust of that triangle back in 2019 reached its measured move, meaning according to the Elliott rules. In early December, it hit 31.15 on the mark. And then we dropped down to about 30.90 or something like that. So if you measure it, it was perfect. But we went on to make new highs. So in a strong market, the thrust could easily be exceeded. And even though the 3,800 is where the triangle indicates, as far as the upside is concerned, I think we will break above 4,000 on the S&P and 13,000, above 13,000 on the Nasdaq. I would say 13.4 to 13.6. Now,
it's not that far away, really, the way it trades.
No,
price-wise, it could be time-wise, but price-wise.
The thing about the triangle, the only thing that I'm watching is, if you notice, every leg down, the A and the B and the C, they each roughly consumed 13, about roughly on average, about 13 trading sessions. Well, today, what would it be? 1, 2, 3, 4, 5. 5 trading sessions were back up to the upper trend line. So there is definitely more conviction as far as this D wave is concerned. But if everyone's positioned long from here, they are up for a disappointment if it's truly a triangle. We'll find out soon, because there might be we might be headed to courts. The election results aren't out. They might be contested. There could be riots. Who knows what the next week or two will bring? But we know
100,000 cases a day of COVID.
Yeah, and here, exactly. So what I'm very optimistic about is the HYG, corporate credit. Because I didn't understand what was going on for the last few months since the June high. The first ABC was textbook, ABC with equality among A and C. Then you have that first leg up that exceeded the prior wave C. We dropped back down. That was small wave A. And then we started moving sideways. And then I picked it up as being a triangle. So here we go. We got another triangle on our hands. And all these triangles are trying to tell us something. And what is it? That the next move up will likely be the last. Okay? So the S&P, we don't know yet if there is a triangle on the S&P or the Nasdaq, but we do know that there's a triangle on the HYG and on the XLF. I am willing to bet that the XLF won't exceed the February highs. It will test them, it'll get super close to them, but the financials are likely to put in a double top, and then it'll all come back down crashing when the indices, the major indices, stock indices.
Okay, well then a correlation to this, and we had a big gap down in the 10-year yield after the election, and now everyone's saying, you know, a week ago everyone's saying, yeah, we're going to 1% or better, and then you know, too much company, and then we had that negative day. Yields dropped sharply yesterday and somewhat today, but XLF, the recent strength has come from higher yields and a steepening in the curve. So if this is going to happen and XLF is going to 31, then I have to think higher yields are part of the equation going into this, and that the market.
So that's interesting, because I was looking at IEF yesterday, and it rallied. Its value area for 2020 is a tight range, 119 to 123.
Yeah.
Okay.
What's IEF?
IEF is 7 to 10 year treasury.
Oh, okay. Bonds. The spread. Okay. Yeah.
And it's the actual price of the bond, not the yield itself.
Oh, okay.
Bonds are rising, so which means yields are falling, and I'm sure you're seeing it. So the thing is,
but if this is going to happen, I don't see falling yields being constructive for XLF. They haven't been. This recent rally has been when we've rallied from about I don't know, 50 basis points.
There might not be, but what if they stay range bound? What if they stay range bound for a while?
Yeah.
And everybody wants to buy the cyclical stocks, the laggards, because of what's going on, recovery and this and that. But meanwhile, the bond market will continue to tell a different story for a long time. And the market can remain irrational much longer than you can remain solvent. You know how they say it. Plus, I'm sure that everybody's trying to balance their portfolios. Okay, if the stocks rise, they're going to try and keep everything in balance. So they're buying bonds as well. I don't know. This might be a little bit above my pay grade. I've always found the stock and bonds relationship, they don't always correlate the same way. It's a strange correlation. It changes all the time.
Yeah.
And everybody who wants to try and crack this nut is nuts, It's just, things happen for God knows what reason. Plus, what is the relationship between the Fed funds rate and the Treasury? You have to take that into account as well.
Yeah.
So again, I'm not the best person to talk about it. However, I can try and deduce things from the price action on the chart. So
yeah,
it's
a big trade. That's a big
that?
trade, XLF from $24 to
because
31.
Now if you go by, if you get a B wave about the size of the A wave, we're talking about 30 to 31. If you look at the volume profile, do you see where that huge spike is up there? That's near 31, and you have a gap. So we're talking 29 to 31 is where this counter trend move might end, because it's questionable whether this waterfall drop in March, April was an impulsive wave or not. If you try to eyeball it, it looks like a 5-wave impulse, but internally it could easily be a triple zigzag. Who knows?
Yeah.
So there's a lot to be gleaned from the coming.
Yeah, it's almost like if this plays out, XLF is going to even outperform some of the high beta tech names on a move.
I think they'll all move in concert, to be honest with you.
Yeah.
But if we break above 29.59, which is the D wave, you know,
Right.
you have a triangle, especially if we move above the red line. That's the value area high for 2020. If we break above that, which is about 2570 or something. XLF was weak yesterday, if you notice.
Yeah.
And I don't know what it's doing
That's because the
today.
yields were down.
Yeah. So who knows? Maybe we will get that triangle in the S&P 500 and the Nasdaq. I'm hoping for it, actually. And then we'll catch the market, the S&P, around 32.25 to 32.27, something in that area. We'll see.
Okay.
Yeah. Down.
Wow,
at,
that's all the way back to almost a breakdown.
To the trade, to the trend
Loads.
line, the AC line on the S&P. I'm going to show it in a minute.
Okay.
So this is the transports. This is what we had. That's the chart I showed early on this year when we last met. I said, you know, we have a 5-wave move. Okay. We have that 5-wave move in the transports. So what did we get? A zigzag down or some sort of a move. I don't know whether it was a zigzag or more. I don't know. You know, if that last move since 2020 was a zigzag or an impulse.
ABC. Yeah. Okay. Yeah.
No, from the top of 5 you have an
top,
ABC,
yeah.
and then you have a counter trend rally.
Right.
So who knows if the first leg down is wave A of the second zigzag? We don't know yet. But the transports, if you look at this next chart, look what happened. We actually exceeded. I went. By the way, I changed the
count.
The Elliott wave. If you notice. Yeah. Here I'm showing a completed 5-wave, but that's right. I didn't change it, actually. That's a shorter term. That is actually the 3rd wave of the super cycle. The 3rd wave of the super cycle ended in 2018. Okay. And now we have the 5th wave of the super cycle confirming by moving above the 3rd wave. So we got above 12,000. I'm expecting it to go north of 13,000, and I'm going to keep an eye on the dashed upper trend line that I drew on this chart. Okay, so we'll see how it goes. But the transport.
Do you have any idea time-wise, Peter? Do you think
about it this way? If we go back to the Nasdaq right here,
yeah.
Remember, this was our last interview, and
right.
I said back then that the only index that's given me the warm and fuzzy about the impulsive nature of this rally, because the S&P, I cannot decode it like this, unfortunately. I can't. Okay, I cannot with good conscience tell you that it was a 5-wave. But here, at least, I was able to provide a reasonable wave structure. And if we are right now in the green, what do you call it? Degree of trend, okay? Because I color coded them, it's much easier to read that way. What is primary? A few months to a couple of years. So, okay, so the primary wave, beginning with wave 1, started when? In April. And I'm sorry, in late March, let's say. So how long has this been going on? March, April, May, June, 7 months, 8 months. So we're talking months to a couple of years. I'm thinking that sometime in 2021, the top will be in place.
Okay.
And then once all the newness of this, or once all the fanfares associated with the election, everybody is celebrating and all this stuff, whatever, and they go back to business. And if COVID doesn't subside, because everybody's talking about what the vaccine, right? Well, vaccines won't be available en masse until when?
end of next
2021.
year.
Yeah, there might be a vaccine available in a few weeks, but mass production, it's really hard to produce these vaccines. So what's going to happen in the meantime? What's going to happen in the meantime? Very possibly a double dip recession. And if they're talking about higher taxes and all this stuff, you know, everybody's saying, oh, you know what, we thwarted the threat of a blue wave. Who knows what's going to happen? Okay. So we'll see how it goes.
Okay.
So we're talking, if we are to believe the nature of the primary trend, we're already on our eighth month of what is considered to be a few months to a couple of years time frame. So,
okay.
All right.
You, Peter.
And you know how fast these indices, they bounce or fall 10% in a heartbeat. It's ridiculous, the extent of the moves. It's just like nobody's appreciating what's been happening. You drop 10%, you rally 10%, like there's nothing. On any given year, a 10% rally is a victory for any money manager.
Well, you've heard the expression that markets bottom in silence and top with violence.
Yeah. Oh, no, that's a nice one. I have to remember that. Here's the thing. I mean, all these moves, and there's definitely some euphoria underneath it all. And there's a lot of assumptions, too. People are assuming and pricing in a lot of stuff. And now I'm going to show towards the end of this presentation where we are from an earnings perspective and what could happen if we have reason to unprice all these assumptions. So anyways, that was the transport. We're headed up towards 13,000 plus. This right here is
Russell.
The Russell. I'm glad you said it. I was wondering what it is. So again, you have to keep an eye on the 1-3 line. We're headed towards 2,000 plus, and we see where it takes us. Okay. Again, there's a lot of sideways movement, by the way, that makes it really hard to discern an impulsive advance. So that's why I keep my eyes open every single day.
Okay.
Right here is, what is this? This is the S&P 500. The high in early September reached that blue line that I drew. It hit it right on the head.
Yeah.
And we began falling. I estimated a downside of 327. And there was plenty of room for it to fall. It could have gotten down to 3,100, 3,112, and I would still be perfectly happy with the extent of the decline within the ongoing yellow fifth wave. So within it, if what's happening is a triangle, and I have it right here, if what's going on is a triangle, the C wave fell just short of the A wave. It got just below the 88.6% retracement. And now, as of this morning, we are at about 35.10. We got to 35.07 in the futures. So here's the thing. We have a Fed announcement today. We have a jobs report tomorrow that's expected to be weak. I don't know. And I don't put too much confidence in expectations. But it's possible that after this rally this week that the market will pause a bit. And the best place to pause is today's high, the overnight high.
Cool.
Plus you have Apple that's paying its dividend tomorrow. That's where that rally is coming from. And it's notorious for topping one day ahead of its ex-dividend day. So keep
a great
all these things in mind.
Man. I love your work, man.
Thank you. So again, I agree with your folks, the folks.
Greg is
we have
very
to keep an eye on the possibility of a triangle. I hope it is a triangle. And then sure, there are two ways to measure the triangle. The height of the triangle, you can project it from the E wave, whatever that happens to be, if it is a triangle. Classic technical analysis projects the height of the triangle from the point where it breaks out of the triangle. So again, sure, 3,800 plus, and we'll see what happens when we get to 3,800 plus, if and when we do. Talking about valuations, I mean, this is the scariest thing ever. Based on 4-quarter trading earning or trading 4-quarter earnings, of course, the last 3 quarters last 2 quarters, of course, have been horrible due to the virus. It's being construed as an anomaly, and earnings will remain that week under 100. Real earnings under 100. They're currently at 97 a share, which makes it, if you are to use a PE of 20, a historical PE of 20, the market currently is overvalued by 76%.
Wow.
Okay, overvalued based on real earnings. A lot of people want to use the operating earnings, meaning the earnings where they strip off one-time charges, so on and so forth. It makes the E larger, and if the E is higher, the PE is lower. So if you use operating earnings, the market currently is at 42% overvaluation, which is amazing, because if you look at this chart, every time we hit 22, 24, 25, whatever, it precipitated a sell-off. Look where we are right now. And the reason being is that what happened with the virus is construed as an anomaly, and we are to look past it. However, and currently we're trading at a PE of 35, 36, or if you use operating earnings, 28. Historically, it's 20, 21, 22, 19, whatever. Everybody wants to put a different PE or multiple on earnings. Historically, an average 20. We are at 28 from an operating earnings standpoint. We're at 35, 36 from a real earnings standpoint. Now, here is the projections. The S&P fully prices in the 2021 earnings, which are at 164, at Monday's low. Monday's low was 32.28.
Yeah.
We were there, meaning the full 2021 was fully priced in on Monday at the closing, or midday Monday. That's if you use operating earnings. If you use real earnings, it's fully priced in at 2,700. So here's the thing. If we are to roll back all this optimism, let's say that whatever they're estimating will happen in 2021, anything unforeseen that causes these assumptions to be rolled back will cause the S&P to drop back based on trading earnings, guess to where? To the 2,400 zone, which is what? The March lows. So that's why I believe that if all this exuberance, if it doesn't pan out, we get to the 4,000 level, 3,800, 4,000, 4,100, God knows what. And anything that, any little unforeseen event, whether it's exogenous, endogenous, who knows, black swan will cause us to drop by as much as 40%. So that's why I'm warning everybody to not get overly bullish, to just be very careful moving forward.
Peter
Goldstein.
Peter Goldstein at www.61.8.com, right?
Yes, that's right.
All right. So people can, do you have a letter, videos? Is there a subscription fee? Tell us about your business model pretty quickly.
So I do have an annual subscription for $300 a year. And be honest with you, I share a lot of the stuff that I do. Other than my trades, I share on my public stream as well at Peter Ghosteen.
Yeah.
So there's plenty of information that I give out. And, you know, I'm not luring anybody into subscribing. It'd be nice. It'll keep my website going, and it'll keep me motivated to
keep writing,
publish that information.
Yeah. Well, you know,
So,
I want to thank I want to thank you for being motivated to return to FACE time after time, Peter, and share your insightful work with the FACE community, my trading warrior brother.
Thank you for having me, and I look forward to seeing you again.
We'll do it, buddy. Have a nice
All right.
holiday season.
You as well.
Okay, everyone, that's a wrap for what today is what, Thursday. Okay. So we'll see everyone trade the NFP with us tomorrow. Good luck with the Fed, and I'll see everyone tomorrow for the NFP. You're welcome, Tom, Jorg, Richard. See you, money. Okay. All right, guys. Remember, don't just count your pips, count your blessings. You're welcome, Michael, Richard. I'll see everyone tomorrow. Adios.